Hi friends, welcome back to my channel. In the last two videos we have been learning about the creation of charges. In the first video I talked about what are the charges and the FAQs, the definition of the charge, charge as per Companies Act, charge as per Transfer of Properties Act, the mortgage as per Transfer of Property Act, then the difference between charge and mortgage, then mortgage by deposit of title deeds, and matlab when we have to create a charge. The principal rule of creation of charge, that the charge will be created only on the assets of the company, and the assets are as defined under Schedule 3 of the Companies Act. Then we pondered upon, in the second video we talked about the most common questions and queries that pop up again and again. A number of persons get confused and keep on asking such questions, so I had made the video number 2 for that, which pondered about whether charge will be created on hypothecation of vehicle, whether charge will be created on pledge. That was the second question that we dealt with. The third was whether there is need to create charge on the personal guarantee of the promoters. The fourth question we saw was corporate guarantee and mortgage of the charge. Fifth was whether guarantee given by the company to other company amounts to creation of charge. Sixth, we saw whether charge will be created on the this we have to deal in this video, whether charge will be created on FDR of the company. You see, a number of times the company gets the OD limit against the FDRs. Deposit of fixed deposit received with the bank by way of security for loan amounts to pledge of movable property. There is required to create a charge on the pledge under Companies Act 2013. So conclusion is that the charge on FDR of the company, the OD limit, needs to be registered. Okay, under Companies Act 1956, this there was no requirement to create a charge on pledge. So at that time there were some case laws also, Sri Meenakshi Mills versus ROC, and the decision was that there is no need to create a charge on the fixed deposit. But in this Companies Act 2013, as I told you earlier, that the list of properties against which charge has to be created has been done away with, and now we have to create a charge in case of pledge also. So creating a charge on FDR of the company amounts to pledge. So in case of pledge, since we have to register a charge, so a charge has to be created as per Companies Act 2013 in case of a limit has been obtained against FDR of the company. Okay, now coming to the practical aspect of it is that in case of liquidation, what happens is the bank will get an option to whether to surrender the assets to the liquidator, or it can realize the amount itself. Okay, in case of bank, it is very easy to realize the FDR and obtain the amount. So if we go to the practical aspect of it, in case of FDR, even if charge is not created, the company will come in the unsecured list, but that will not amount to any negative point, because the bank has an option to take the realization itself. I hope I'm making myself very clear, that even if charge is not created at ROC against the FDR, it will not have any practical impact, right? Because the bank will not go to the liquidator for realization of the property, as this FDR the bank will realize on its own. But going to the theoretical part, as per Companies Act, we have to create a charge in case of an OD limit against FDR, so that the bank comes under the secured list in case of liquidation of the company. Okay, I hope I have made it clear that theoretically we have to create a charge in case of OD limit, but practically it may not have any impact if the charge is not created in case of FDRs. The seventh thing we come is whether charge can create on future assets of the company. As per principal rule, future assets are not part of the assets sides of the balance sheet of the company, and it is quite clear company cannot create security on the same. So there is no need to create a charge on future assets of the company. That is quite simple. Then what is the time period to file CHG1 with ROC in case of creation of a security out of India? In case of a company which has a property outside India which has been given to the bank as security, in that case, in case of charge created out of India and comprising solely property situated outside India, 30 days after the date on which instrument creating or evidencing the charge or copy thereof could in due course of post, if dispatch with due diligence have been received in India, shall be substituted for 30 days after the date of creation of the charge at the time within which particulars and instruments are to be filed with the registrar. Okay, when we get this certificate, the charge of the copy in when we get it, then we create the charge, right? The next point is whether enhancement of loan amounts to modification. Yes, the enhancement of loan amounts to modification and a charge has to be created at the ROC. In case of companies, it is normal practice that they obtain working capital facilities from the bank. Their working capital facilities are usually secured by charge on the current assets of the company. Whenever the working capital facility are increased, a company is required to give an additional security, which means the existing charge has to be enhanced to cover the enhanced limit by filing CHG1 at ROC. Now the 10th question we are going to deal with is whether charge will be created on hire purchase agreement. A hire purchase agreement plays the financial position as a secured creditor. So a hire purchase agreement must be registered with the registrar of the companies. Right, friends?